Hello investors, welcome to Business Learnings. In this video, I'll be talking about what different investment options do you have available right now. Given that markets are at their all-time highs, it might not be a very good idea to invest in the market right now. What are different other options? So make sure that you watch this video throughout the end because I'll be covering all other options that you might consider at this point in time. And make sure to subscribe the channel so that you do not miss out on my future videos wherein I'll tell you how to make smart money. So let's start. The stock market. The stock market is at its all-time high, primarily because of the unprecedented liquidity. Uh, you know, Across the world, different governments printed a lot of money just to get over COVID-19 because businesses were shut down, they were short of cash, people were short of cash. Governments had to print money, and a lot of this money it's coming into the emerging economies like India. And when these money come into emerging economies, the stock markets rises. If you see the FII and DII numbers, foreign institutional investors had poured in more than 60,000 crore rupees in in November, and in December also, I guess the number was north of 50,000 crore rupees. A lot of money, a lot of money. If you just look at the DII data, domestic institutional investors, they have been the net sellers, which means that they understand the markets are overvalued and probably we might see some correction. So, equity stock market is a no go as per my opinion. Second, the debt market. Again, it's a no go. I'll straight away say a no because though they are a safer investment options, the returns that the yields that they are giving right now are very less. The reason is uh, these bonds used to give better yields, but when RBI cut down the interest rates, a lot of people ran to these bonds with their money because these bonds were still offering higher interest rates, and this in turn pushed up the bond prices, and that's why they are not attractive anymore. They are expensive. So equity is out of the question, bonds are out of the question. Cryptocurrencies, let's talk about the trend now. The problem I see with cryptocurrencies or crypto assets as people call it, I don't understand what's the asset about it, but the problem with cryptocurrencies is they do not have any intrinsic machinery to generate some cash flows. If you earn a Reliance share, you understand that company will do some business and generate some cash flows, and from that you will be getting uh, you will be getting capital appreciation. You will have your earnings and dividends, and that's how you earn money. But with bitcoins, with cryptocurrencies, you do not have any such machinery to generate cash flows on its own. uh, all we are betting on is if probably the Bitcoin keeps on rising like it has been rising in the past few years, probably will be a millionaire. There are a lot of technical analysts predicting that Bitcoin will breach 150,000, $300,000. Some are even saying that Bitcoin will breach $1 million. Just because its supply is limited, it doesn't mean that it will keep on rising. The reason I think so, because Bitcoin is a technology on blockchain, and a lot of interesting technologies are already built on blockchain, which are way better than Bitcoin. So I do not see Bitcoin existing 10 or in the mainstream 20 or 30 years down the line. Some other technology will replace it, and that's why in the long run I do not think it's a good bet. Uh, the reason the cryptocurrencies are rising is again the extra liquidity, and it has been finding its way. There has been a lot of buying in the United States that could be traced back to the United States, which are pushing up the prices of the cryptocurrencies. But we do not know when will they start shorting, and retail investor is the one who always gets trapped in all these things. So stay away if you do not understand it. Bitcoins are out of the question. The fourth major alternative uh, to equity investing is gold, and in my personal opinion, right now gold seems to be priced at a very reasonable number right now. The reason I think so is, you know, COVID-19 caused a lot of money to be printed, while the amount of goods and services which were produced in 2019. In the year 2020, it was more or less equal to 2019. There was not much growth. Amount of goods and services remaining constant, currencies, the amount of cash available to people, they are rising. This clearly means that inflation will happen. Inflation has already started setting into India, and we'll start seeing it across all over the world. Uh, and gold is the best way to protect you against inflation. I understand that its price has risen by more than 25% this year, but again, it's available at 7 to 8% discount from its all-time high. So, based on my personal opinion, uh, I think that the best investment option right now, at least among equity market, cryptocurrencies, bond market, and gold, is gold. Because when inflation starts setting in, its gold prices will start shooting up. uh, Now, this is not an investment advice. Please do your own research uh, before investing, because it's your money, and you have earned it hard. If you like the video, please press the thumbs up icon and support the channel. Thanks a lot for watching. See you in the next video. Bye.